one of my rules, of my 8 rules, is that how to decide when to sell a company. And it comes down to, for me, doing a comparison of all the things that I might like to buy, and then just swapping companies I like more, swapping out companies I like less for companies I like more. I call it the economic sell rule because it forces you to, we're good at making decisions that are this for that. We're not typically good at making decisions like, do I want to hold on to this stock or do I want cash? That's where we have a harder time. And this at least helps me to not make foolish decisions. By doing comparisons, I get a far better result.
So basically assessing the opportunity cost, if you will, of holding on to a specific investment when you could be invested with the same capital in other opportunities.
Exactly.
Is there a danger of that kind of thinking leading to a lot of turnover? What kind of turnover do you think is healthy for a portfolio?
And this is why I only make changes to the portfolio 3 or 4 times a year. Aside from little rebalancing trades in between, I'll gang up my portfolio, rank it by a variety of criteria, and then I'll take all the replacement candidates and I'll rank them on the same criteria. Then I'll sort them. I'll take the median one in my portfolio. Since I typically have 35 stocks, that would mean number 18. And then I look at the ones in my portfolio that are below the median idea in my portfolio, and those are candidates for sale. And I'll sell 2 or 3 of them. And I do this 3 or 4 times a year. So it gives me a portfolio turnover rate of around 30 to 35%, considerably lower than most mutual funds. And then I'll buy 2 or 3 that are in the candidates for replacement that are above my median idea. And that enables me to, when I look at the end, I say, yes, I like this group of stocks better than that group of stocks. And I execute the trades.
Help us understand how you actually go about making that decision of whether to sell a security and buy another, because sometimes companies can look very different. You know, let's say you're holding a Coca-Cola and you're trying to decide whether to sell that and buy Bank of America. They're very different animals. So how do you kind of bring them all on the same common denominator, if you will?
Right. You can never get everything exactly to the same common denominator, but I will have valuation metrics that help me. I'll have a few sentiment metrics, such as the volatility of the stock price, since low volatility tends to work better, but only tends to. I'll have various variables for neglect, accounting quality, and typically what I'll do is I'll come up with a rank for each one. I have certain weightings based on what I think the market tends to be rewarding or would be likely to reward over the next 3 to 5 years. Weight them, turn it into a grand rank, and then I do the sort. It's not perfect. I don't know anyone that exactly does it that way. But that is at least one way of being able to try to bring all the variables together. Now, accounting quality is difficult to test with respect to financial companies, so I have to put in some filler variables there, basically making them equal to the median of it for the non-financials. But that's at least how I do my rankings. And I have also a series of rankings for industries that plays a role in terms of what I'm going to put in terms of candidates for replacement. So when I get the ranks and I look at, deciding what to sell is usually pretty easy, because I'll say, yes, this seems to be close to fully valued. No, I don't like this industry as much as I used to. this company looks like it may have issues in the future, and things like that will lead me to what are my sells for the things that are below my median. But for the buys, then I have to basically take each one and I'll read through the 10K. I'll try to find reasons why the rankings are wrong, and I'd probably say that for every 10 I look at and look through thoroughly, I only get about one or two that look right when I'm done. More often than not, I'll find, oh, the accounting statistics as summarized from whatever database I use aren't giving me really the true picture of this firm. And so 8 or 9 times out of 10, an idea that scores well doesn't hold up to scrutiny when I begin to really look through and ask, how is this company managed? How is it run, etc.